Hello guys, we are back, and for today we are going to be backtesting a little bit because as you can see we are on a not a losing streak but just not where we want to be right now. So new thing that I figured out was having a first of all we're gonna have either a liquidity sweep and then confluences and says to enter on low time frame. So that's one, and then the second one is going to be either break of structure plus fair value gap, or actually plus confluences to enter on low time frame as well. So what this is looking like is going to be this. Basically, we're either going to have one second. Basically, we're either going to have like this, and then liquidity sweep, and then it's probably going to be like a retrace, and then like that's going to be the first one. I can actually, let me just label that. And then our next one is going to be break of structure. And then this should continue up. Okay, oh, this one looks kind of bad. Hold on. So next one is going to be a little bit of break of structure. So it's going to be looking a little bit like that. It's going to be looking something like that, okay? So we have our number one here, number one right here, and then we're going to have our number two right here. So what this is basically is, let me try to explain this for you. So as you can see here, we have this high time frame liquidity. Let's say that's like an hourly, and then we are going to come down, and then we are going to make a liquidity sweep with our candles. Are going to go exactly like this, so they're not really gonna, break structure. So it's mostly our candles. We want a candlestick that's like this. Where is my drawing? We want a candlestick that looks like this on the line. So like that, and then we can have another one that looks kind of like this. Like so. Because the other way is going to be once we have a candlestick here like that, and excuse me because they're not the best candlesticks ever. Next one is going to be, let's say like this is the break of structure. So next candle we're going to need to expect it to do something like this, like a big Drake glissy candle. That's bad. Something like that. And then here we have a break of structure, right? So that way we look for a continuation. And this, it's brand new to me. I am still not trading this, but I've seen it happen, and it happened today. Let me show you guys what happened today. Let me show you guys what happened today. 1 second. Okay, so as you can see here, we have if we go into the 15-minute, we have this right here. Market open was around 0930, so right there. That was market open. As soon as market open, as you can see, we don't have any high time frame liquidity here except for like over here. The only thing we do have are fair value gaps. Fair value gap here and a fair value gap here. Yeah, so we get a break of structure right here, as you can see here. That's a break of structure to the upside, and then we also get another one here. So we get two break of structures in the same fair value gap, okay? So now what we're looking for is after that break of structure, we're looking for it's either going to be a 15-minute or a 5-minute break of structure. Also a 5-minute, as you can see. And then the 15-minute, it came back down to the 15-minute fair value gap, and then if we go into the 1-minute, let me see, go back into the 1-minute. I did not take this trade, by the way, I'm just back testing. If we look into the 1-minute, price did come up right here, and then it showed rejection off of here, so we could have entered here. Honestly, we could wait for maybe like another confluence, but here there wasn't really another confluence except this fair value gap being respected. Actually, no, it wasn't. Let me see if it was a 5-minute. Huh, interesting. But anyways, price did come back to the imbalance, to the fair value gap, so that's where most people took their trade today, targeting these highs and even those highs up here. And this is where I took shorts, which was invalidated because my shorts were somewhere around here, somewhere around there. Actually, no, they were like, yeah, right there. My shorts were right here. Anyways, so that's the first one. We go back to another day. Let's see what other day we have in here. Let me zoom this in. Oh, what happened? I don't know where we went, guys. Stand by. Okay, well, we're still there. Yeah, let's go into here. November. Alright, let's mark out a line here. November. So we were in a sell-off. We didn't have really anything. Let's see. Let's see on the 1 hour if we move it to the 9 candle. So the only thing we did have was just this fair value gap here, and that's pretty much it. And then just these levels of liquidity, but we were already taking those before market open that day. Yeah, we don't really have anything. Let's see on the 15-minute. What do we have on the 15-minute? 15-minute, honestly, it looked like it was a no trading day, to be honest. 9:30. Yeah, because we had a big sell-off. As you can see, the break of structure is here. There is one break of structure right there. And there was a change in the state here as well. So after that break of structure, we can look into the 5-minute to see if, where is the line? Did I miss it? November. To see if maybe, there was some sort of retracement into a fair value gap, which there was. So market open after that break of structure, and then now we can just look for a retrace into a fair value gap. So we could have entered off of here, off of there, and then stops above these, because we normally, damn, 60 points, holy shit. Maybe stops around here. That is still 40 points. Stops around there. Oh yeah, right there. And then maybe targeting at least like a 2. Let's see on that 1 minute. Let's see if we can. It's gonna be a pain in the ass. Let's see if it even goes all the way back there. What did I choose so far? Yeah, it's probably gonna take forever. But anyways, the plan was there. Let's see. Let's choose another day. Let's see. Let's do December 23rd. Okay. So coming into there, we had these levels of liquidity here, and this big fair value gap, and then also these lows, and yeah, let's see into the 1 hour. Let's see what we had to get closer into 9. Okay. So yeah, as you can see, let's go into the 15-minute. And then in the 15-minute, you can see that we had a break of structure here. Oh, not there, sorry. Break of structure right here. Right there, and then we also had another one right here. And another one right here. Not that one. Another one right there. So we get a lot, right? So what we can do is look into the 15-minute fair value gap and then wait for a retracement after market open. So 9:30, as you can see, it was a perfect time to take longs. It was a perfect time to take longs here. So yeah, right there, and then it also was on the 15-minute. So after price retraced to here, we go into the 1-minute. Oh, this sucks. But we go into the 1-minute. Where are my lines? How far did we go? Holy shit. Oh, there it is, okay. We go into the 1-minute. And we can see as soon as it taps into here, we could have right there. And then targeting just these highs right here. We also had this fair value gap, I believe. Yep. Small, but, you know, very good still. So we could have gone in here as well with stops either below here or here. Like after this, I can invalidate 76. Oh no, 39 points. That is still a long one, but we can obviously target these highs right here. Something like that. Oh, that is way too far. But it still got hit, you know, so that's good. All of these low time frame liquidity. So got out at 2.347. So honestly, I think that's gonna be my strategy from now on if we don't get any liquidity sweeps right off the bat, because after backtesting a little bit, I can definitely see that it works, and it is a very good strategy to trade. So let's see, let's do one more. To the 6 a.m. candle on January 17th. I think this is the 9 o'clock. Okay, so 9 o'clock we had this, and then these, and then obviously this hourly fair value gap that got tapped into. Moving to the 15. We move into the 15-minute, and you see we get a break of structure right here. Get a break of structure. Then now we can just look into price coming back into this fair value gap here. So price came back to this 15-minute fair value gap here, and we could have entered there, but if we go into the 5-minute, let's see what it shows. Okay, yeah, on the 5-minute we could have entered off of these. We do get a break of structure onto the downside, so that could be one of the shorts that we have. But no, the clear draw was on the highs to these highs over here. So let's go in the 1-minute. Oh, this sucks, man. Let's Going to the one. This one should be closer though. Yeah. There it is. So if we go into the 1 minute, limit orders on this fair value gap here, and it would have been a very choppy price action. I remember this actually. With stops like right below here, and targeting all these. Or we could have entered off of this one here, of this inverse, because there's an inverse fair value gap here. Either this one, but I would have gotten stopped out there, or this one right here. Actually, no. It would be this one right here. This one right here, because, and then we can put our stops down there, and then target these highs, and then internal highs, all these internal highs right here, for an exactly 2.04 risk to reward ratio. And then honestly, we could have just held until these highs, these data highs over here, and then this could be your take profits, and we could have sold right there. So that's our backtesting session for today. That's our backtesting session for today, and yeah, so just looking back one more time, it's gonna be one liquidity sweep, which we know that one, plus entry liquidity sweep plus retrace, and that would be either a 5 minute, just a retrace, and then from there we look for break of structure, or basically entry confluences on the little time frames. And then for the second one, it would be just break of structure plus a retrace into a fair value gap, and then target draws for liquidity. And then as well, we would do the same on as for this one. So that would be basically what it is. So we have a liquidity sweep, and then a retrace into liquidity sweep, and then entry confluences on the low time frames, and then target draw some liquidity, and then the other one would be break of structure, retrace into a fair value gap, and then target draw some liquidity further there. So yeah, we need to lock in because this is not good. So